Welcome into the Savvy Investor radio show and podcast. Glad you are with us. What keeps illusionist David Copperfield going at age 66? We're going to find that out. And a survey reveals that Americans are retiring earlier than expected. We're also going to find out why on that end and the math behind Roth IRAs for high wealth taxpayers. Of course, Mike and Ryan are here to help you grow, keep, and distribute your wealth in the most tax-efficient manner possible. The Savvy Investor Now radio podcast and on YouTube. Mike Kinnett is not here. He's got the weekend off. Ryan Herbert in the retirement hot seat. But I got to brag on your shirt. Is that a Bad Birdie golf shirt?
No, this is actually a Walter Hagen.
Mm-hmm.
I've looked at the Bad Birdies, but I just like the material of these shirts. My wife likes to kind of comment on my shirts, but everyone else at the office really likes them. So I tend to just kind of go a little extravagant from that nature.
That is a good looking shirt. Now, are you the type that I've got one Bad Birdie? I mean, they're pretty pricey, and they're very comfortable. I'm the type of golf player that when I'm out there, man, you're going to sweat so much, especially during the summertime. It gets so hot that I don't want to spend, $1.25 on a shirt and then have it just be dingy within a month or two.
Yeah. I'm really just all about comfort. Mm-hmm. Nowadays, it's funny when people come into the office, there are some people that do expect for some reason or another that, Mike and myself are going to be sitting here in suits and
that's not happening,
or ties or even button down shirts. And, that's never going to happen. I like to joke, Mike and I like to joke. The only time you're going to ever see us in a suit is really, at your funeral. And that's really it. But half the time you come in the office, Mike's in here in shorts. And I'm normally just in polo shirt and dress pants because, like I said, at this point in my life, I am just all about comfort. There's no reason for me to be uncomfortable sitting at work or driving in the car for that matter, or playing golf. It's all about comfort.
It is. And if you're like me, you're not a good golfer, so you have to dress a lot better to try to make up for your deficiencies when playing golf. But hey, this isn't a golf show, although as much as we like golf, this is a show that's going to help you prepare yourself to play golf whenever you want in retirement. And that's the goal of Mike and Ryan at the Savvy Investor Radio and at Prostatis Financial. Let me give you the number before we get the show started, 866-597-1040 and online at thesavvyinvestorradio.com. That is going to get you a mulligan. Is that the right? I don't know if we're going to use that term, but that's going to get you in front of the guys to help with your retirement. Maybe you need a restart on your retirement, whatever the case may be. That information is going to help you get to them so you can make better retirement decisions. All right. So there is a video. It's from an old 60-minute piece. You may have seen it from about 10 years ago. And it's seeing some new life online now. It's called The Truth About 401ks. And correspondent Steve Croft interviewed a financial planner named Brooks Hamilton. And here is what he had to say. We played this a little bit on the show before, and we've talked about it. But listen to this. Here's what he had to say.
The fact is that the typical 401k investor is a financial novice. They don't know a stock from a line. And we give them a list of 20 or 30 mutual funds with really, really powerful names. They sound like, gee, that's where I want to have my money.
What are generally the quality of the mutual funds and 401k plans?
Mediocre. I'm going to be real honest with you. With half the funds on the list, really dogs, what people would characterize as dogs, shouldn't be on the list to start with.
Mediocre. I don't want to be in a mediocre fund. Has anything changed in the last 10 years? Because that's not giving me a lot of confidence in my 401k.
I mean, yes and no. There some things have changed, but for the majority of it, in most 401ks, just like this gentleman Brooks talks about in this clip. It's not my favorite 60-minute clip. My other one is the general accountant for the U.S. talking about how much debt we have and how much of a problem is, and I cannot remember the gentleman's name, but what he's talking about in this clip here is that mutual funds are pretty much the only option inside of 99% of the 401ks out there, and it's been that way for years and years and years. And if you've listened to the show, you've heard Mike and I talk about how much we dislike mutual funds because of the fees built in them, the lack of control that you have really with what they're doing inside of it. And then, if you're buying them outside of your 401k or outside of your IRA, it is that taxable issue that is there. But, a number of years ago, some 401ks started doing brokerage windows, meaning that you're able to, if your 401k is with Schwab or Vanguard or Fidelity, you're able to essentially just like open this window into the other side of Vanguard or Fidelity or, whomever it is, and really buy whatever you want inside of that 401k. And that's kind of where his comment about pretty much everybody who has a 401k is a novice. Mm-hmm. So, what the 401k has done for you is they've said, all right, here are the 20 or 25 or 30 funds that are available to you. And kind of more of what I've been seeing lately is they're getting rid of all those individual funds to try to streamline the process for most people and just offer those retirement date funds. Mm-hmm. Which, if you're going to pick mutual funds, I think those are the absolute worst ones to ever use. For example, back in 2008, the T. Rowe Price 2010 fund and the T. Rowe Price 2015 fund were each down 28, 32%. And those aren't the exact numbers, but that's my recollection. And I use the T. Rowe Price funds because shortly before 2008, I was working for T. Rowe Price. So that was kind of my familiarity with mutual funds. So, 401ks have not really changed over the past 10, 15, 20, 30 years, however long that they've really been in existence. There are some people that can use those overall brokerage windows and buy the other funds that are out there. But then once again, if someone's a financial novice and they're just picking the funds that are available to them based on the returns, opening up that window and saying, all right, now I have access to the entire investment world at Vanguard or Schwab or anything, that's not really the best decision for you. And, there have been some other changes. The traditional 401k has been the way to go, but now there's the Roth 401k out there. And what happens when most people come into our office, when clients come into the office, the whole goal of sitting down with Mike, myself, and our team is to take that onus off of you as the plan participant, as the potential retiree, as our client, take the onus off of you so that you don't have to worry about, here's where my money's allocated, here's what's happening in the market, what changes do I need to make, so that Mike, myself, and our team are really handling that aspect of it. But then what we're doing for those clients that are still working is using our 401k X-ray tool. And we're doing this real deep dive down into your 401k. We're looking at the fees that you're paying. We're looking at the risk that you're taking. Because if you're taking 2 or 3% in fees and you're taking on more risk than the overall market, that's not really a good thing. And most people think that, I'm a conservative investor or a moderate investor or whatever it happens to be. But our 401k X-ray, what it does is it does this deep dive and it shows us, here's exactly how much risk that you're taking. If the stock market does X, your portfolio does Y. So those are the things that we're looking at. And we're suggesting here are the changes that you should make inside of your 401k. Because when we're doing these financial plans, by putting us on that retirement path, we want to make sure that everything in your financial picture is working together, not just the money that Prostatis itself is handling, but all of the other investments that you have. And if you want to find out more about how much risk am I really taking in my 401k, how much am I really paying in fees, and what are the best options, or are there any other options for me with my 401k, I encourage you to give us a call at 866-597-1040, 866-597-1040, and sit down with Mike, myself, and a member of our team here at Prostatis, and we will do your very own portfolio 401k X-ray. 866-597-1040, 866-597-1040.
Also want to remind you about the 401k X-ray. You can access that at thesavvyinvestorradio.com. Again, that's thesavvyinvestorradio.com front page. So 2 ways to get a handle on your 401k. 866-597-1040 and online at thesavvyinvestorradio.com. This is a complimentary sit-down, a complimentary deep dive on your 401k. If you save $500,000 or more for retirement, congratulations, but now is not the time to watch your money go down in case the market takes a sudden turn. And that's why the 401k X-ray is here. 866-597-1040 and online at thesavvyinvestorradio.com. We've got more coming up, but Ryan, since we're talking about this and 401ks, there's a magical number. When you talk about, taking control of your 401k, there's a magical number, and that is an age, and that is 59 and a half. Why should our listeners, why should our viewers right now be so interested in the magical age of 59 and a half? Why is that so powerful?
Well, it's interesting you mentioned that 59 and a half, because I was just meeting with some clients the other day, and they were working with another financial advisor who has radio shows all across the country. He writes tons of books. He's the self-proclaimed IRA expert. So, that kind of gives you an idea of who it is. And they're not working with that gentleman directly. They're working with an associated advisor, part of his group. You call into his radio show and they refer you to whomever's in the area from that perspective. And we're sitting down talking about the overall financial plan for them. And their biggest thing was, we have all of this money inside of our 401k, and they were 66 and 65, and they were still working. The goal for them was to retire at between 68 and 70. And, their concern was, we have all this money inside of our 401k, but our advisor is only working with us on this $320,000. He's not talking to us at all about this other $1 million that we have combined in our 401ks. And, we were walking through the process, and I'm talking about, here's the portfolio X-ray. Here's what the 401k X-ray shows us. Here's how we need to allocate your money for income, kind of walking them down that process. And when we're sitting down and we're talking about, here's the money that you need for income, because you want it to have, I think their number was like $6,500 a month. We need to take, it was $460,000 of your money and set that aside in a vehicle that's going to produce income. And their comment was, well, how can we do that? All we have is this $320,000 that our advisor is working with, that's the only thing that you can do anything with. And so my response to them was, well, actually, since you're over age 59 and a half, there's a clause that 99% of 401ks have, and pretty much all the same aspect, all 401ks, pretty much all 403Bs, and then, the TSP and 457s, all those things. They all have these clauses that says once you've reached age 59 and a half, you can take all of your money out of the 401k. You could roll it all over to an IRA, or, you can put it in your bank account and pay tax on it if you want to get crushed. But you can take it from the 401k, take it away from those options that they're giving you, and have much more options, much more diversification available to you. Take it away from the fees the 401k is charging, take it away from the those restrictive investments, take it away from their rules. And so, they were, honestly kind of taken aback by this fact. And they said, we didn't know that we could do that. Is this something new? And I said, no, it's been around, for as long as I've been doing financial planning, for about 20 years. It's been around that long. And their comment was, well, how come our advisor never mentioned this to us? We never heard about this. And it's one of those things that people need to be aware of. Once you reach age 59 and a half, you can take that money out and have it work, better for you, differently than you, and really get you on that path to that financial freedom. And that's one of the things that we'll talk about during our 401k X-ray. Here are all the options available to you inside of the 401k. Here's all the options available to you outside of that 401k. And does it make sense for you to make that switch? And if you want to find out more about what a 401k and portfolio X-ray would look like for you, what your advisor is not talking to you about because they don't manage those assets, give us a call, 866-597-1040, 866-597-1040.
A lot of people are taking advantage of that hear us on the radio, that are listening to the podcast, that are watching YouTube, and they are really getting, in some cases, like you say, it could be eye-opening to find out what exactly is in your 401k and take control of it. If you would like to take that step today, it's a great opportunity to do that. 866-597-1040. That's 866-597-1040. And that's going to be complimentary for the next Savvy Investor radio callers, the next Savvy Investors that text in to thesavvyinvestorradio.com and click on the 401k X-ray button. Again, the 401k X-ray button at thesavvyinvestorradio.com. That's going to be complimentary for you to sit down with Mike and Ryan and get started with your 401k X-ray and portfolio protection plan from Prostatis. And that is available for those that have saved $500,000 or more for retirement. Congratulations. Done a great job. Now protect it and help it to continue to grow so that you can retire.